The euro currency finding a little bit of hope off those recent lows that we've been trading down near 114, actually just above it. And that is held despite the fact that we're getting a lot of negative news. From a technical perspective, we're kind of still in the middle of that range, that 113 to 118 range that we've been trading, really going back to the middle of August to middle of September when we set that range. But the market right now possibly seeing a tendency to be leaning a little bit more towards the downside, and I think a break of that 114 level would lead us to probably new year-to-date lows, which would have to get us south of 113. Now, a lot can happen between then and there, and there's a lot of fundamental news which has been sort of tug-of-warring the euro back and forth, but ultimately here, we're still holding that range, and unless we see a substantial move below 114, probably will continue to do so at least until we get through the next heap of news. And if you look at some of that news, comes from the ECB. Yeah, the ECB still wants to normalize rates. They want to end bond purchases. They want to make announcements soon. And I think right now they're finding the biggest obstacle to that is Italy. And Italy has budget problems, and they're trying to negotiate with the European Commission about how they're going to go about that and how they're going to write it and how they're going to make it better. And they're just not buying it. It seems that right now you've seen Italian bond yields spike higher and then come off. Every bit of news is a breath gasper, but you're ultimately seeing the idea that if the ECB can't normalize rates out to the middle part to late part of 2019, it's basically what we've seen all the appreciation based off of. You take that away, I think you've got a lot of downside to euro currency in the near future. That hasn't happened yet. We'll find out later this week if the ECB continues to talk the talk. They won't be doing any acting at this point. What they'll be doing is be telling you what they're going to do or what they would like to do, and that is eliminate their bond purchasing program, similar to what the Fed did, and then later on announce when they're going to raise rates, probably not for another year or so, but at least to have it on the radar. And right now that seems to be working as the euro currency holding that range. But if you take Italy, if Italy throws another wrench into the system, that could change very quickly. And lastly, the other big event out there, which isn't until March, would be the Brexit announcement and actual the reality of Brexit. I mean, we've been waiting for it since June of 2016. Now we continue to see the euro appreciate based on the fact that the Brits really haven't figured it out yet as far as how they're going to approach things like immigration, things like banking, things like borders. They have a lot of issues going on right now, and they're not finding any clarity. So there's a lot of uncertainty continuing around Brexit, despite the fact that we're just several months away from this all becoming a reality and no longer becoming a discussion. So right now we're looking at the euro-pound cross, which saw highs about a month ago. It has come off those highs, so the euro a little bit lower versus the pound, but still in the meat part of that trade that we've seen, holding at around 88. And I think that right now, the euro, it all is based on what the ECB is doing, not necessarily what we're seeing with Brexit. Brexit is more of a UK issue and will be more of a pound issue, whereas ECB in Italy is more a euro issue. And that's why we're seeing complications with the euro moving forward. So right now, still holding that range, that 113 to 118 range, but look out, we're very close to that bottom part. And if the ECB doesn't give us some good news about normalization and about rate hikes later on next year, we could be testing it very quickly. This is Todd Colvin coming to you from the floor of the CME Group.